Hi, I'm James Dunn. Welcome to the Inside Network. Hello, I'm James Dunn from the Inside Network, and welcome to an interview with Cameron Brownjohn from Federation Asset Management, which is behind Federation Alternative Investments. Welcome, Cameron.
Thank you very much. Thanks for having me.
It's a pleasure. And I'd like to start, Cameron, with asking you about the genesis of Federation as an investment house, how long you've been doing this, and really the motivations behind it, because as we'll get to shortly, this is an investment firm with a difference, and really wanted to get behind what caused really or drove the development of Federation from the outset.
Okay, sure. Thank you. Well, Federation is a private capital firm that seeks to invest in businesses and assets that meet a social and economic need. We have a team with skills, sustainable infrastructure in social real estate, and then in pockets of operating private equity in areas like healthcare, where we've got some particular skills. So we're a bit unusual. There's not many investment firms that look like us, but I guess the genesis of this firm, the core of the team and the core of our process and the way that we operate and all of our analytical approach and credit work really is born of our background predominantly from Macquarie Group, where we were members of the principal investing effort there. And essentially we've been operating as a core group since 2011 in various guises. And we've unplugged what we were doing for Macquarie into Federation in September of 2018. So early in our journey as Federation, but we would argue many years into our journey as a team.
Now, the categories such as ethical investment, SRI, socially responsible investment, or more broadly as it's become known, the ESG, environmental, social and governance investment. Did you set out to build an ESG house, or did that naturally come from the kind of opportunities you looked at?
Yes, thank you. It's a good question. We get asked versions of that question from time to time. The truthful answer as to I guess our mindset as an investment house is first and foremost to protect our investors' capital, and secondly then to make a return on that capital. It makes us feel good to be doing a good thing for the world, but we are not seeking to make charitable donations. We are seeking to make a prudent return on our investors' capital. So we're profit seeking as a firm. We, however, have a mindset that it's more likely that we will be able to protect our investors' capital and make a return on our investors' capital if we invest in an ESG savvy way, if we invest with a social conscience. We believe that there's a positive correlation between being an ESG investor and returns. And in fact, that's starting to be borne out by the academic research that people are starting to study this factor around the world. I think one of the more notable reports that I've read recently from Journal of Finance or one of the notable journals shows that in 73% of cases, there is a positive correlation between funds that are investing in an ESG savvy way and positive returns relative to those that are not. I guess it offers also the opportunity that 27% of the time they're finding the opposite, but we're happy to proceed on the basis that we believe investing in an ESG savvy way is positively beneficial to our investors' returns and the protection of their capital.
Take us through the three streams that you focus on, the social, disability, housing, the renewable energy, and lastly, the more traditional kind of private equity investment stream.
So I think the first one you raised was sustainable infrastructure, renewable energy. We hope to build a substantial Australian first and foremost business, investing into that opportunity set. We have form and background and experience in other markets in developed Asia, like Japan, New Zealand, Korea, and maybe even parts of Southeast Asia, but generally more skewed towards the developed markets than the developing markets. Mm-hmm. Target those areas, but foremost, we're trying to really prosecute what we think is a profound opportunity in Australia. And there is a profound opportunity, starting with renewable energy. There is near on, in a sort of 50 gigawatt capacity market of existing baseload power stations, 15 gigawatts of predominantly black and brown coal-fired capacity has been and is exiting that system over the next decade. And that needs to be replaced with something. And it will be replaced with renewable energy capacity. So that's a profound and it's an enormous opportunity set. And we think that within that construct, however, there will be winners and losers. There needs to be changes to the Australian transmission grid. You can't just build a solar farm anywhere and make money. You can't just build a solar farm and not sell your power for it. You need to be clever with where you're doing these things, how you're doing them, and where you're doing them. That's why we think it's good to have Stephen leading that initiative and in head of a very intelligent and experienced team on these topics too here as well. So first thing we're doing in sustainable infrastructure is building what we call the Sustainable Australian Real Asset Trust, SARA, and we're doing that parlaying almost our initial investment, which is in WindLab, which is, we think, Australia's preeminent developer of wind farms. It's the former CSIRO wind division that commercialized some years ago. We are in the process of acquiring that business. We're the largest shareholder at the moment, and it's under takeover offer by way of scheme of arrangement. And we're excited to have teamed up with entities owned and controlled indirectly by Andrew Forrest and some other high net worth and knowledgeable investors to acquire 100% of the equity of that business and really fast track and bolster and build out its what we think is exciting development book that it's got, near on 7.7 gigawatts of developments across 50 projects, with the skew of those projects into Australia. And we think that we can help them grow that out prudently and professionally into the medium term. So that's what we're doing in renewables.
Can I just ask, just while we're on the renewable energy side, is that a build, own, operate position that you'll take, or just an investor position?
I think we'll seek to turn farms with cows on them into farms with wind farms on them and cows around them, perhaps. We would seek to operate through WindLab those wind farms into the future.
Okay, move on to social housing and specifically the area of disability housing and the opportunity, the need that you see there, and what solutions you can bring to that.
So there's been a lot said in the press over now a protracted period of time about Australian government disability insurance scheme, the NDIS. Mm-hmm. One of the more recent initiatives of the government is to try and solve what has been, a concerning problem in society, where there is a not insubstantial section of the community with unmet needs for housing. Young people in nursing homes, for example, that are in nursing homes because they have a disability that would otherwise place them in an area where they need care, but they're inappropriately housed in a cohort that doesn't suit them. Mm. Or people that just are not serviced and still living at home with aging parents and so on and so forth. So out of the $22 billion per annum budget that is the National Disability Insurance Scheme budget at the moment. The federal government has allocated $700 million to indirectly pay the rent, houses and accommodation dwellings for people that can buy and build and fit accommodation that's satisfactory for these people. So there is an industry building around that, and it's $11.5 billion immediate opportunity set for that industry. So to contextualize that for people, that's about the same size as the investable asset class of student accommodation in this country, which now for many years has been an acceptable and an accepted institutional class. So we've identified that we can make that work, that we can make a difference. And we figure that the best way for us to do that is to team with people that have the relationships and the connectivity into care groups that look after disabled people, because I will not hold myself out to be an expert in the day-to-day care of these people. The people that do that are angels. I will, however, suggest that the Federation team has the capability of building social infrastructure and building homes. So that is where we're focusing. We're a landlord seeking to work with Australia's best care groups for disabled people and people living with disability. And we're seeking to build homes for those people under long-term contracts.
And so that brings in the third arrow in your quiver, really the private equity side of things. Is that a more traditional kind of investment that in the way that you've structured it and the kind of assets you're looking for?
Of the many areas that I don't know much about, nor my team know much about, we're not experts in retail. We're not experts in consumer products. Many private equity firms are experts in those areas and employ teams to prosecute various opportunities that they find in them. So investors in Federation would not be investing in us to be trying to make sure that we develop the next shoe brand. We don't know what kind of shoes people wear. No, it wouldn't be, I think, an ordinary, normal private equity effort. There are some sectors where others in the private equity market, and it's filled with many clever people, that we do bump into them. Healthcare would be one area where that's certainly true. But the Federation team would argue we've got strong experience in healthcare, strong experience in financials, strong experience within the technology landscape as well, but only in pockets. So within a continuum of tech, maybe we know about that bit. And then there are some other pockets, but no, I'd say the shape, James, of our private equity business is relatively unique. And the other thing that I would say is it's also pretty flexible. So we don't feel like we need to, for example, be a bulge bracket private equity firm. We don't feel that we could be a venture capital firm either. We wouldn't feel that we have a background and certainly the credit work that we do, we're not good at guessing which companies will be successful due to some trend. We're much better when there's some data that we can analyze and figure out using that data. That would mean everything else where we would argue we can be fluid depending on what the market climate dictates is the most sensible thing to do. We have been believing that there is a non-trivial, relatively better opportunity in growth equity. Since we've started, we feel that it's an under-prosecuted landscape in the sectors that we play in and know, and feel that there are not as many investors, and therefore we feel there's a propensity just on the basis of supply of opportunities and demand, supply of money into those opportunities and demand for the capital in those opportunities. We feel that there is the potential for asymmetric upside. People have asked us, well, if the world takes a downturn due to the coronavirus, for example, what will you do then? Be patient and we'll think about what it is that we're doing. But I can tell you that the Federation team employ people that bought the first and most distressed debt parcels in situations like Babcock and Brown, Allco, Alinta, Centro, Colorado, Briz Connections. So we have experience in restructuring and turnaround, and we could very much pivot through a sort of loan-to-own investing environment as well. And we think that's a powerful tool to have, is flexibility. Some investors I have heard will disagree with that. They will believe, no, if you're a growth equity shop, just continue to do that. We think that actually you've got to be thoughtful about the way that you're behaving throughout a cycle and not just stick to the same thing, because in some climates you'll make money and in some climates you're destined to fail. So we think that ability to pivot and be fluid is a core competency and a strength. And so in that way, no, I'd probably argue that our PE business looks and feels a little different to others as well.
Now, what about the liquidity situation, which is a concern to some investors, and the time horizon that you recommend?
We spoke earlier about when we were setting up, why don't you do long short equity? And we don't know how to short stocks. Similarly, some people said, don't you realize you would raise more money if you did a LIC or a listed investment company? And they were very much the topic du jour in 2018. And we thought long and hard about that, and then concluded that our underlying assets were illiquid. And so we feared that the LIC itself, if we were to set the funds up as a listed investment company or a listed investment trust, we feared that they would trade at an illiquidity discount. So we decided not to do that, even if it meant the capital raising journey would take longer. We, however, also, so we're an unlisted trust, James. We take people's money, and we would encourage them to allocate the portion of their investment portfolio that's suitable for patients. And in some people's portfolios, that might be 5%. Some people's portfolios, it might be 40%, but it's up to the investor.
And you said before that allocate this to an area of your portfolio where you keep your patient capital, your patient investments. What bucket, if people need to put this into a bucket, where does it go? Directly into alternatives, or ultimately does categorisation not really matter, given what purpose it's serving to the investor?
I think the IFAs, so the independent financial advisor community, certainly would consider us within the alternatives bucket. Some may give us additional weighting than what they would say just for private equity. Perhaps they would consider us across private equity and infrastructure and real estate, because in functional practice, that's what we do. But yes, I would say we're fair and square in the alternatives allocation. And therefore, depending on which horse for which course, we would be somewhere in that minority allocation within a portfolio, acknowledging that most people's portfolios certainly have a skew to listed equities.
Thank you, Cameron. I think I'll wrap it up here, but that's been a wonderful explanation of Federation Alternative Investments, the style of investment you're looking to make, and more importantly, the motivation behind it and the benefits it can provide to investors. So I've been speaking with Cameron Brownjohn, the Chief Executive Officer of Federation Asset Management, about the product Federation Alternative Investments. Thank you, Cameron.
Thank you very much for having me.
Bye-bye.